Now we're going to be chatting about the stock market. You know, you heard the song coming into the this segment, Money, Money, Money. So we're going to be chatting with Simon Belanger, who is part of the Canadian Investor Podcast. Hi, Simon. How are you?
I'm good. Yourself?
Good. So I wanted to chat with you about, and maybe you can summarize for us, why the worldwide drop in the stock markets last week was something that's so rare.
Well, first of all, would you be surprised that it comes down? A lot of it comes down to the Trump administration in the U.S.
Yeah, I wouldn't be surprised to hear that one bit.
So it all started Wednesday last week, although this year we've seen the markets being pretty volatile in big parts because of Trump and all the stuff that he posts or tweets or truths, whatever we want to call it, on his social media. So it's been very much so a headline-driven market. And then what we saw on Wednesday is the markets were expecting reciprocal tariffs that were to be announced. So Donald Trump called that Liberation Day. So reciprocal tariffs would mean that a country that imposes, for example, 20% tariffs on the U.S., then the U.S. would impose 20% tariffs on that. So a lot of market participants, investors thought that, okay, they may not love that, but it does make a little bit of sense. But in reality, we got something much different. They ended up doing something completely different. The markets were not expecting that. So essentially what they took is they based their tariffs on the trade deficit that the U.S. has with other countries. So a trade deficit just means that the U.S. will be importing more goods and services from that country than it exports to it. And not to go into the math of it, but essentially the higher the deficit in percentage terms, the higher the tariff the U.S. imposed. So for countries that had trade surplus with the U.S., meaning that the U.S. exports more to that country than it imports, it also placed 10% blanket tariffs on those countries. The 10% tariffs went into effect yesterday, and then the higher tariffs will be going into effect on April 9th. We've already seen the reaction of certain countries. So we saw China, which the U.S. said they would impose 34% tariffs on China. We saw them turn around and say on Friday that they would also be imposing 34% tariffs on the U.S. We saw other countries like Vietnam saying that they would look to negotiate with the U.S. So what we're seeing is the markets are really unsure what the fallout will be. And the biggest problem here is that a lot of companies make goods outside of the U.S. and sell them into the U.S. So you saw a lot of these companies being hit by, for example, a Nike, Lululemon, dollar stores in the U.S. that would buy a lot from China, for example. You also saw technology sectors, financial stocks like bank stocks, energy stocks. They were some of the hardest hit sectors. So it does create a whole lot of uncertainty. And in terms of the major indices, so an S&P 500, which contains the 500 largest companies in the U.S., that was down more than 2% in those 2 days. The same thing for the NASDAQ, which is technology stocks. And the TSX in Toronto did a little bit better and was only down 9% in those 2 days.
Wow. So in terms of, if we were to compare this against other market drops, so let's compare it with, let's say, the drop that happened in 2020 or 2008, or I can't even remember, I think it was in the early 90s, there was another big drop. Or how does this compare to some of the other significant drops that we've seen in history?
It's definitely up there. So the most recent one that people would have seen with their investments, if they've been in the market for more than a few years, it would have been March of 2020 when COVID hit. So the markets really did not know what was going to happen. The markets were fearing the worst. And then as governments started intervening around the world with stimulus packages, in the U.S., they sent over stimulus checks. In Canada, we had help for businesses, the CERB programs, individuals that were losing their jobs temporarily. So there were a lot of benefits boosted to those programs. So what we saw is the markets were not expecting this amount of stimulus, so it recovered quite quickly. So that drop, it only took a couple weeks, and we were back into positive territory. Right now, I think it's going to be a lot different, and especially if you go back even to the great financial crisis, by then it was more of a liquidity crisis. So we saw in the U.S. with a lot of leverage and the subprime lending that was going on. So that took several years to unfold. And you also saw governments intervene a whole lot, especially in the U.S. But what we're seeing right now is we, first of all, don't know how other countries will react. So it creates a whole lot of uncertainty in the markets. And even if these tariffs would be reverted in a few days, what we've seen, especially with Mexico and Canada, which was kind of the trailer to this big announcement on Wednesday, is that the U.S. seems to be flip-flopping a whole lot on these tariffs. And that uncertainty is not great for business, because if you're looking to invest billions of dollars, when you're a business, you're usually investing these amounts for 10, 15, 20, 30 years. So right now, you don't know what's happening. You don't know what will be changing in the next days, weeks, months. Even after Trump has done his term, what will happen? Will we go back to the way it was before? So it will likely put a lot of pressure on the economy, both in the U.S., Canada, and worldwide as well.
And so if we go back to some of those other stock market drops, let's say in 2008 or 2020, the market eventually just came back up to where it was before in the past and even surpassed that particular mark, right?
Yeah, that's correct. Yeah.
So at some point, yes, this is bad, but I guess it's sort of reasonable to assume that the market will recover eventually, and it'll actually surpass where it was, earlier this week, right?
Yeah, for those with longer term horizons, that's a very reasonable approach to take. So if you have I'm 39, so if you have 20, 30 years left to invest, even more if you're younger, then yes, traditionally markets will recover over long periods of time. However, in the short to medium term, it's very difficult to say where the markets will be going. I could make a case for you that it's going to be, we'll finish a year up, like I could make the case that we'll finish a year another 10, 15, 20% down here. So I think the key for investors is just not to panic on the first hand. If they have a good financial planner advisor, give them a call. If you're feeling nervous, that's what they're there for. That's what you pay them for. And I think it's really important to just be diversified, not only in the different stocks that you own, but different asset classes like bonds, like gold.
Or real estate.
Or real estate, exactly. Having some diversification, because those assets will move differently than others. So
right.
If you have a different asset, it can help you out. But I think the important thing is not to panic. Yeah.
Right. So, but would you even recommend that people should actually consider getting out to buy right now in the market because things are so low? So it's a buying opportunity for people?
It could be for certain types of companies. So what we had seen is the markets were actually at very elevated levels until February of this year. So markets were trading at very, very high prices compared to historically. So, like I said, you can make a case that this is just starting, like we could make a case that it's recovering as well. But there's definitely certain sectors in the economy and certain stocks that are looking more and more attractive that may just be some more of a short to medium term kind of thing for sure.
Right. And so we have a limited time left, but I do have a quick question for you. Would you also consider recommending to people that they consider doing some short selling, which is taking advantage of the market going down?
It's not something I would recommend myself or do. The main reason being is the markets could go down, and then the next day on a tweet from Trump, for example, you could see the markets going up because they just made a deal, for example, with China, their
right.
biggest trading partner. So it is a dangerous game to play the shorting game. I would just recommend that if people are extremely well-versed, comfortable, experienced with shorting, it can be very, very dangerous in this kind of market.
Okay, perfect. That's great advice. Thank you so much for joining us this morning, Simon.
Okay, thanks for having me.
Thanks so much.
Bye.
That was Simon Belanger from the Canadian Investor Podcast, giving us some great advice about how to handle things right now in the market. In terms of, are you looking at your spending? Have you tried to boycott spending on Amazon? How's that going? We're going to be talking with someone next who tried to boycott Amazon, and we're going to find out, how did that go for her? It's currently 9:15. You're listening live to Devel Morrison on 640 Toronto. Thanks for listening.